Every year, we notice that our grocery bills are a bit higher, our monthly expenses seem to creep up, and the things we used to buy without a second thought now require a little more planning. This phenomenon is known as inflation. Simply put, inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power. So, why does inflation happen? There are several factors at play. One major reason is the increase in demand for goods and services. When more people want to buy something than what is available, prices go up. This is often seen during festive seasons or when new products are launched. Another reason is the rise in production costs. If it becomes more expensive to produce goods due to higher wages or increased raw material costs, companies pass those costs on to consumers. Now, let's talk about the different types of inflation. There's demand pull inflation, which occurs when demand exceeds supply. Then we have cost push inflation, where rising costs of production lead to higher prices. Finally, there's built in inflation, which is linked to adaptive expectations. As people expect prices to rise, they demand higher wages, which in turn leads to increased costs for businesses. Inflation has a significant impact on your daily life, especially when it comes to savings. If your savings account offers a low interest rate, it might not keep up with inflation. This means that the money you save today could buy you less in the future. For instance, if inflation is at 6% and your savings account earns only 3%, you're effectively losing money in real terms. So, how can you beat inflation? One effective strategy is to invest wisely. Consider options like stocks, mutual funds, or real estate. Historically, these investments have outpaced inflation over the long term. Diversifying your portfolio can also help mitigate risks. Another approach is to invest in inflation protected securities like Treasury inflation protected securities (TIPS), which adjust with inflation. Additionally, consider investing in commodities like gold or silver, which tend to hold their value during inflationary periods. In conclusion, understanding inflation is crucial for managing your finances effectively. By being aware of how inflation works and taking proactive steps to protect your savings, you can ensure that your money retains its value over time. Smart investments and financial literacy are your best allies in this ever changing economic landscape.